Hi, everyone. It's Joe Veneri, the host of Fit Insider, the show where I talk with the entrepreneurs, executives, and investors who are redefining the business of fitness and wellness. Hey, everyone. It's Joe Veneri, the host of Fit Insider. Today, I'm joined by Amanda Eilian. Amanda is a partner and co-founder of Able Partners. On today's episode, we talk to Amanda about her experience as an investor in a positive living space, her take on the future of the wellness industry, including mental health and psychedelics, and her advice for founders looking to break into the space. I had a great time chatting with Amanda, and I hope you enjoy listening. Let's get into it. Amanda, thanks for joining us. We're super excited to chat today.
Excited to be here. Thanks for having me.
So, initially right off the bat, just giving folks some context about yourself, and obviously you're, founded Able Partners, have been investing in wellness, health and wellness focused companies, in addition to being an accomplished entrepreneur yourself. So how did we get here? What's the kind of quick background to fill in the blanks?
Yeah. Well, Able Partners is an early stage investment firm focused on the positive living space, which we define as companies making the daily lives of consumers healthier, happier, and more meaningful. There's a huge overlap with wellness in that definition. We have over 40 companies in the portfolio today, and interesting to note that over 75% of those companies have female founders. Definitely not criterion for us, but something that we're proud to be able to share. And I really started investing almost right out of college. I started out in Merrill Lynch's mergers and acquisitions group, but quickly transitioned to their private equity efforts, went to a middle markets buyout shop from there, where we were focused on the lifestyle investing space. That's really where I fell in love with this work. And I guess as it's relevant to a fitness podcast, the first company we looked at was Athleta. And there I met Karen Benke. She was an entrepreneur in residence at Falcon Head and really a pioneer of the wellness movement, having founded the first corporate wellness company and selling it many years ago. She left our private equity firm to start a company called Juice Beauty, which is now the largest organic skincare company. And when she did that, that was the first time I got involved really for my own account, joining the board of directors, working with Karen there, and I'm still involved with Juice Beauty and on the board. And that's really what got me investing for my own account. But along the way, I had several entrepreneurial detours as a founding partner in a $265 million special purpose acquisition company, which is sort of like a publicly traded search fund. And most recently, co-founding an enterprise software company, Videolicious, which I helped to grow to over 5 million users and recently sold to a multinational strategic buyer.
Yeah, congratulations on the exit. I know that the details are limited, but we'll just say congratulations on that. And certainly another one of the notable accomplishments. And as you were doing that, you mentioned getting into the investment space. Obviously, I think a couple of the things that stand out are the focus on the wellness, you said the positive living, also female founded companies. Was that going into it, thought out? Was the idea that you're going to invest in these types of companies with women founders and that was the opportunity, or was it more of a personal interest, or just how things played out?
Well, we definitely started out with a focus on what we call the positive living space. Lisa and I both believe strongly that the shift to all these wellness, better for you behaviors is a long-term secular shift in consumer behavior. Unfortunately, our medical system is failing so many people as the country grows richer and our GDP grows, our life expectancy is falling, our rates of depression, anxiety, other mental illness continue to rise. And so there's really a need out there for other solutions and for people to take a proactive role in their own health. So that was definitely one of the founding principles of Able Partners. In terms of backing female founders, I think that's something that both Lisa and I, having been founders ourselves, feel that we understand that journey. We understand some of the greater obstacles in the way of female founders and other minority founders, where estimates range, but somewhere around 70 or more % of consumer dollars are controlled or influenced by women. It makes a lot of sense that those women will also make some of the most successful founders in the space. So, we're proud to say we've done that. We did an accelerator for female founders last year, where this year, January 2018, where over 850 companies applied. We did that with The Wing as our marketing partner. And, that's something that I think some of our most successful companies in our portfolio have female founders. And again, they're serving a customer that they understand intimately, and it makes a lot of sense.
Yeah, absolutely. And especially, as you've mentioned, given the shift that wellness has taken, in society, the number of companies that are now focused on this space, and certainly the overlap there with, female interest in these companies having special insights into what the consumer wants, and a lot of folks creating the product that they wanted, and then introducing that to the market. When you look at how you're finding these different entrepreneurs, opportunities, companies, are there specific things that you focus on, like the fact maybe that, someone is scratching their own itch or hitting on an idea at the right time and introducing it to the market? So are there things that, as you're evaluating deals, stand out to you for the opportunities?
Yeah, I think we have a bias towards founders that are, as most investors do, that are coming at it from a place of personal passion, personal experience, not just, people who have graduated from business school and identified the white space. That can work too, and that's also important. But the founder journey, as we know so well, is one with a lot of ups and downs. And if you're only sort of looking at the exit when you start, you might not really have the wherewithal to make it to that point. So we certainly are looking at people who are building businesses with some sort of a personal connection. And, that's, founders first. That's always where we start from, as a lot of investors do.
Yeah. So you would say you're kind of betting on the jockey and not the horse, so to speak. You're really focusing on that individual and what they're bringing to the company.
Yeah, we invest early stage. So we will do pre-seed through Series A. And certainly at the pre-seed stage, a lot of times, whatever, people love to show you their 5-year financial projections, which are, somewhat meaningless at that stage. You definitely want to do the work to know that there's a sound business model there. But beyond that, it's hard to know what your real customer acquisition costs are going to be, or whether the business is going to grow anything like you think it will. So it's much more important to look at who the person is, because, things are going to change a lot. That's the one thing, for sure, is that things are going to, change a lot from the beginning until you've launched the company. I remember when we first met Audrey Gelman, co-founder of The Wing. It was before she had her co-founder. It was called, terrible other name, Refresh. It was positioned itself as a fairly different concept, but the core of what she had, which was community and her own skills and strengths as a founder, were what we were betting on. And we were happy to see it change. So again, at the early stage, I think a lot of the companies that we're backing are really revolutionary, not evolutionary, creating new categories. So you have to be willing to accept a certain amount of uncertainty at that point.
Absolutely. And that's refreshing to hear as someone who's gone through the founding a company and fundraising, and folks investors at different stages who have expectations. It's, to me, at some point, wild expectations for, like you were mentioning, the customer acquisition costs and the 3 and 5 year revenue outlook. And we're here just thinking like, hey, how do we get to next month, the 3 months, let alone 3 to 5 years? So kind of focusing on what those individuals bring to the table. Are they creating a new category, which I think is something that's hugely important when you're looking at how big can something get? Does this justify, venture investment? Does this justify an outside investment? And can it potentially return that?
Right.
How does someone like The Wing at such an early stage, how did they get on your radar? How do you find them? How do they find you?
Let's see. Lisa was the one who originally found The Wing, and I believe it was from her personal network, from somebody that she had worked with, maybe with her startup in the digital media space. I'm not 100% sure how that introduction came about, but in general, we find people through a few different ways. Certainly within this positive living wellness space, we like to say that within 2 meetings, somebody has probably been referred to us, simply because we've been doing this work longer than anybody. So for well over a decade before Able was even formed, both Lisa and I independently had been investing in wellness. So I think within that small community, we're pretty well known. And then beyond that, our current founders are a great source of referral. And it's always a nice compliment when they send somebody to us, and people in the industry. So we have contacts at all the large CPG companies, and those people will often send something that might be too early for them to see. And we also, we will proactively identify areas that we're interested in and do landscape surveys. And I still do cold outreach to companies that I think are doing interesting things that haven't hit our desk.
That's awesome. The fact that you're still going out there and, on your part, trying to get onto somebody else's radar if you think the thing that they're doing is interesting. You don't always hear from the investor side people talking about this much, but it certainly happens. And that's part of, as you kind of mentioned, identifying the opportunity in the landscape, recognizing where that white space is for all the evolution that's taking place in fitness and wellness now. And there's so many incredible companies that you guys count in your portfolio. You mentioned The Wing, Moon Juice, Goop, Four Sigmatic. That's kind of a who's who in the kind of wellness space. Is there an opportunity, white space that you're looking at now that you're kind of getting interested in or looking for that next company?
Yeah, I mean, we're always looking for next companies. And, one thing I didn't mention about Able, but we were all funded by internal capital. As I said, Lisa and I had both successfully grown and sold previous companies. And because of that, we have more flexibility than traditional investors in what we can invest in. And we like to take advantage of that. And there are companies and sectors that we invest in that other people can't or are skittish about, whether it's because their limited partners, their LPs won't allow them, or they're looking at a very tight, time frame fund life exit that a deal wouldn't make sense for. So those are some of the areas that are exciting to us. Certainly within that area, sexual wellness, whether it's a company like Dame or Mod or other great people who are doing things in that space right now are interesting. One of our core areas of focus right now is mental health. We have a thesis that people are turning from physical fitness to mental fitness, that mental health is really the new weight loss. I don't know if you saw, but this January, I think Barnes & Noble said that books on mental health outsold diet books for the first time ever, which I think is both encouraging and discouraging because it speaks to the underlying need. So, I think that's an area that just needs tons more focus and investment that we're spending a lot of time on right now.
Definitely. There's a huge movement both in using the digital to connect in person. So there's obviously the coaching, therapy, various apps. You can get the treatment that you might need remotely, but then there's also the kind of next wave of maybe using the digital to connect in person, continuing that care remotely, telemedicine, all those different evolutions. So the kind of growth of that space is we're just now scratching the surface of it.
Yeah, and I think we look at it really broadly when we talk about mental health. So, if you talk to Amanda from Moon Juice, she really looks at her company as having a mental health focus. So anything from ingestible wellness, like a moon does. Slow tech is another area that we're focused on. We invested in a company called Lightphone. We definitely think there's a lot of space for mental health and technology to interact. And slow tech is one of those areas. Meditation is part of that. Certainly a lot of people have been trying different things in the meditation space lately. And one of the areas that we've been able to do a deep dive in that still has a lot of stigma associated with it, but is incredibly promising is psychedelics for therapeutic use, which is an area that we can be involved in that not everyone is able to right now. So we look at mental health really broadly. We're investors in Alma, which is really trying to upgrade the therapy experience from both the practitioner and the end user side. So we'll look at all sorts of companies in the space.
It's broadening, and it's almost limitless in the opportunities within that and the connections that are made. Like you mentioned, even from like Moon Juice taking the approach that how are they getting involved in the mental health space, psychedelics, as you mentioned. Obviously, there was the announcement, just last week about Johns Hopkins and the research center that's being developed there. And also the fact that maybe some institutional investors, like you mentioned, a little bit different than you all, aren't able to get into that space. What does that look like as you start to evaluate the opportunities there? You said it's an area of interest to you. How would you go about, taking advantage of that growing kind of sector?
You're talking specifically about therapeutic psychedelics?
Yes.
So, that's an interesting space right now. The US landscape is mostly dominated by nonprofits, people like MAPS, who have done incredible work over 30 plus years, really laying the groundwork for where we are today. From an investor perspective, philanthropically, I support and will continue to support all of those organizations. From an investor perspective, when we look at where we can deploy capital, I think there are a few different areas right now, and we're really very early innings here, of course. So again, because we have this very patient capital, we can play the long game, which we have. Therapeutic psychedelics are very different from cannabis. A lot of people look at what's happened in cannabis and on the investor side find it interesting, but cannabis is a consumer product. Psychedelics are a service. They're going to require a container and implementation methods that are very different than what's happening in cannabis if they are to be successful, and it will need to go slowly. So I think, again, we're uniquely positioned there, but some of the areas that you can invest in right now would be the retreat space. We invested in the first legal psilocybin retreat, psilocybin being the active ingredient in magic mushrooms. It's called Synthesis. It's in Amsterdam, and they're doing incredible work, having brought through hundreds of people in the last year for an optimized psilocybin experience where they work with multimodalities. So they're working with breath work, they're working with meditation, and they're putting that all together with the psilocybin experience to try to optimize outcomes based on best practices from the research that has been done really since the 1930s in the United States that they are drawing from. Certainly medical centers are going to be the next wave as the market matures. So there's a number of people right now either looking to be part of expanded access once the FDA grants expanded access for MDMA and psilocybin, which many people think will happen within the next couple of years. And so looking at really integrating that with somebody's treatment. And there's the treatment compounds and protocols themselves. So Compass Pathways, which is doing phase 2B trials with psilocybin for treatment-resistant depression. They are actually doing the FDA trial work to be able to bring this to market, and that's the actual compound. And then there's, these ancillary businesses around that. So in the media space, Third Wave has done a lot to educate people about safe use of psychedelics. And there's a number of other media companies lately that have come up in the space as well. So I think that's right now what an investor could start looking at, but certainly over the next 5 years, that space will explode, I think.
Absolutely. And I think that, what was it that you mentioned? Synthesis is the name of the company that does the retreats?
Yeah, Synthesis in Amsterdam.
And that's almost like a Wanderlust festival geared towards psychedelics almost, it sounds like.
Well, it's what they're trying to do is, and the URL is synthesisretreat.com in Amsterdam. And what they're actually trying to do is take the best practices, what's being used in these studies, how people respond best to psychedelics depends a lot on how the set and setting of where they're given. So they're implementing the best practices of set and setting and sort of stripping away some of the shamanic overlay that a lot of the people in the community administer these substances with. So they are approaching it from a more Western perspective while still drawing on the research that points to what type of an environment will lead to the best outcomes. And they're doing it in a group setting, which I think is interesting because from a cost perspective, that will ultimately end up being more cost efficient versus the way some of the trials are being done now, which is on an individual basis. And so they're bringing people together in groups of, 12 to 14 people to lead them through a 3+ day experience that has one or more psilocybin experiences.
Very interesting. And that's part of, there's this kind of evolution as you see the different trends that originate in psychedelics. It's certainly one, yoga is one, meditation is one that starts with this. You mentioned, a shaman it's very kind of, almost the religious experience. And as it gets introduced into Western culture, it gets stripped away. And then there's a brand built around it. It's making it more accessible. There's Within who's doing that with acupuncture. It's kind of taking it and making it that boutique experience and then building brand around it. One of the things, in addition to the positive living space, the wellness that stands out among all of your investments is the kind of power of brand. How do you think about that when you're evaluating a company, and what significance does that play in the investments that you're making?
Yeah, absolutely. I mean, I think, it's interesting for a company like Synthesis being sort of the first mover in the space. That's one of the advantages. They can build that brand. We mentioned the Wing before. Certainly, there are a number of people who have now come into the space of a female-focused co-working or social space, but the Wing has been able to establish themselves as the leading voice in that space because they leverage their first mover advantage, and really they do have a unique voice and a unique viewpoint that is embodied by the brand. And I think, certainly you see that in fitness, where sometimes merchandise sales to people who may or may not be actual customers of the boutique fitness experience itself can be 10, 20 more % of their revenues. So that brand piece is really important. If you're delivering an experience or a product that's superior to what else is on the market, unfortunately, that's not always enough. You have to build a brand around it to protect your advantage and protect yourself from the inevitable people who will see your success and copy you, but also to grow outside of, whatever that initial product or service was. Brand building is incredibly important. So most of the companies that we invest in do have that strong brand component, but not everyone. We do sometimes look at platforms or other types of businesses.
Absolutely. And you mentioned earlier, I think it was this year, you did the accelerator in partnership with the Wing. Is that, how hands-on are you with the investments that you're making? Is it you're making the investment and you're kind of deeply involved in shaping that, or you're more hands-off, or does it vary?
So, it really varies. It varies on, who the company is and how much help they need or want. And that varies a lot, who their other investors are. But I think that some of the things that we did both with the accelerator and with all of our traditional portfolio is from the New York City area. Neither of us come sort of with connections, but over the years, we have been able to build that expertise. I grew up in rural Vermont on a dirt road. Lisa grew up on a border town in Laredo, Texas. But now that we have these connections and network, we open them up to our portfolio, which is an important part of what we do. So whether that's brokering a major distribution deal, pulling together the investors for a seed round, structuring meaningful partnerships with other brands in our portfolio or outside of our portfolio, or making introductions to retailers and influencers, a lot of that comes down to leveraging our network and experience to help the companies in our portfolio, and even within the larger ecosystem, even people who are not in our portfolio. We like to be helpful and grow that community in all the ways that we can. And that's one of the advantages of having focused exclusively on this space for so long.
Definitely. And it sounds like you have obviously a ton of experience in the space, and obviously the network that you've built, the reputation that you have. What does that look like going forward for Able? Is it you want to continue to do the work that you're doing now? I know you recently made an addition to the team. I'm drawing a blank on her name right now. I apologize, but kind of expand it. Go ahead.
Yes, Allison Rue.
Rue.
She came from Circle Up originally. She joined us as a managing director. She's a great addition to the team. We knew her from having worked together on, I think, 3 companies that we invested in together with her at Circle Up, and we were so excited to bring her on board.
And so there's a little bit of growth there. And so what does that look like as you continue to evolve what Able Partners looks like?
Yeah, I mean, look, we want to continue to be the leading investor in wellness. One of the things that is a focus of ours is we want to continue to expand access to wellness, as well as diversify the founder pool. A lot of these businesses do start out, sort of coastal, catering to more of a 1% crowd. But again, Lisa and I did not come from those backgrounds. I think one of our key advantages is because we come from a more mainstream American communities, we are able to identify businesses that maybe seem a little wacky and out there at first, but then do end up resonating with a larger audience. And that's something that we would like to continue to see and help support the growth of these businesses reaching more people. And again, because we are a non-traditional fund, we're not incented to continue to raise more and more outside capital and deploy it. We're, incented at doing, good work at whatever scale makes sense. So that's what we want to continue to do, and be creative and support great founders and great businesses.
Definitely. And that's something that is hugely beneficial for the industry when you zoom out a little bit beyond just the positive living and wellness. Obviously, right now you have companies like Peloton preparing to IPO and becoming a common name in households across the country that, formerly might not have thought about a connected fitness device or piece of equipment. The variety of companies that you're involved in, from like the Daily Harvests to the Moon Juice and Goop, becoming, well-known names. How do you think about, again, beyond the positive living space, what trends in fitness and wellness more broadly are taking shape, and how that evolves over the next maybe 3 to 5 years?
Yeah, I mean, we have a number of theses around wellness where we think the growth will come. But, certainly to speak to what you just said, I think that the increasing access to wellness products will become a big piece of that. So, what's exciting about a company like Daily Harvest is they allow people in the middle of the country who, might not have access to healthy eating or, smoothies beyond like a Smoothie King, allow them to order and receive, the highest quality nutritional, food in a way that also fits their lifestyle and is, accessible to them in a way that's going to, some of our local healthy eating haunts here in New York City wouldn't be available to them. So I think that, that's a big piece of it. But, other things, I think that, the personalization of everything, people are recognizing that there's no one diet, no one fitness plan that will fit everybody and be optimized for everybody. So, that obviously plays off of some of the, connected hardware devices like the Oura rings and the Fitbits and things like that. The more that you can measure, the more that you can optimize, and the more that people realize that, it's not a one size fits all solution. And I think that also speaks to the fact that, we think we're going to see fragmentation in the types of companies that succeed, in food, in wellness overall, in fitness. The rise of technology, social media as a marketing channel, e-commerce as a distribution channel is going to allow more and more companies to serve sort of smaller interest groups to optimize for different lifestyles and different types of people. And I think you'll see less of these sort of behemoth, multi-billion-dollar companies that, I am the nutrition company for wellness, because smaller businesses can now succeed and people realize that, again, it's not a one size fits all.
Right. One of the things that we've talked about actually kind of down that path with the personalization, the fragmentation, the fact that folks can start and grow and scale a business that's very specific to them or a specific audience, the potential for consolidation across fitness and wellness. Do you think do you see that as something that's has the potential for happening, or do you more see it as these companies and founders are able to grow and maybe build a 20, 50, $100 million company that they're perfectly happy with running the way that they want to run it, as opposed to, the either acquisition consolidation route?
I mean, I think you'll see both. I mean, we've certainly seen that the large companies in this space are innovating through acquisition. So it's not that there won't be acquisitions and that people won't seek an exit at some point in time. I think it can just happen at a smaller size, and maybe everybody isn't going to have to shoot again for, an IPO or a multi-billion-dollar exit, because the large companies are realizing that most of the growth is coming from these areas and they have been unable to innovate. They lack some of the credibility with the end consumer. And, frankly, it's easier for them to see what's working and do an acquisition and do it earlier than they might have in the past. So, that's going to come down to the founder. And that's something that we talk to all of our investments about. What are their goals? What do they want to see happen in the next, 2, 5, 10 years? Where would they like to be? And, that's a personal question.
Do you see someone like, obviously you mentioned some of the larger companies in the space who are continuing to innovate. They're doing so through acquisition in some instances. You have obviously Equinox, who's doing it from they're getting into the hospitality space. They're now getting into the digital space. Do you see this more kind of CPG wellness focus being something that's of interest to them, or a company like them, where you're talking about, you see the innovation, they don't quite have that, kind of skill set or expertise there, but want to continue to bring other opportunities to their members?
Well, I'm not going to talk about, Equinox specifically, but, overall, I do think that people are looking much more broadly at what it means to serve their end customer. So, whether it's Casper, which is no longer, they're no longer a mattress company. Now they're a sleep company, which is, I think, a smart move for them. And sleep, again, is another space that I think still has a lot of room for innovation and wellness. But people are looking a lot more broadly at sort of the psychographic of their end user and what else they can offer to that person. So it's no longer just a nutrition bar. It becomes a lifestyle. And, I think you've seen that across the landscape, both inside and outside of wellness, and we'll continue to see that as well.
Right. I think one of the kind of through line through the conversation that has kept coming up is just the opportunity. It's where really at the early stages, it's going to continue to grow, whether it's in mental health, whether that's companies now who have had a focus, broadening that focus to provide that service and that kind of lifestyle for their core consumer, broadening their consumer base with that in mind, and given the trajectory of fitness and wellness, if you were starting a company now today, is there a specific thing that you would start, or an area that you would tell an entrepreneur to focus on, or tell yourself to focus on, something that you're kind of looking at and saying, this is a huge opportunity, and kind of wishing somebody would tackle that?
I think, we've talked about some of the areas where we see white space and that we're interested in, and I can share a few more of those. But again, it comes down to where a founder sees their own white space and where they think they can innovate. But, other areas that I think are underserved right now, women's health more broadly, and certainly, the move towards functional medicine. I mean, I think Robinette Parsley is doing a great job there, but there's room for more. And in particular, menopause being an area. We're also interested in childcare, but not all women have children, but all women will eventually go through menopause, and that's an area that I think there's stigma around, and there's not been a lot of innovation that we find interesting. I think there's a lot of opportunity around sort of the decline of organized religion. There's still stigma around therapy, but people always want to find meaning in life. So whether that's astrology, we invested in a company called Sanctuary, or life coaching. Chief, one of the companies we invested in, is really like a YPO for women, but has some elements of that coaching in it as well. I think that's an area where there's still a lot of room for growth. And then some bigger areas where a lot of people are already looking at and innovating, but I think we'll continue to see interesting things come out of gut health. There's so much more that we don't know about probiotics than we do know. And the microbial community, not only in your gut, but on your skin and in other areas. I think there's a lot of work still to be done there. One of the things that gets us excited now is in sustainability. I think historically, a lot of people were interested in the space, but it wasn't clear that the consumer was willing to pay a premium for products with a sustainability angle. But with our investment in Blue Land, we're seeing a huge response. And I think you are seeing finally a shift in consumer dollars and consumer behavior there. And related to that, obviously, plant-based everything, certainly much more mature in terms of life cycle, but continues to be a big trend. So I think all of those areas have a lot of space for innovation. And, another thing we talked a little bit about, but, we think there will be a move from boutique fitness towards boutique recovery. And you're already seeing concepts in the stretching space, sauna space, cryotherapy, acupuncture you mentioned within. But I think that's an area that, will continue to grow as our bodies have been abused by all this boutique fitness for years. People are now looking for ways to put themselves back together.
No shortage of ideas and opportunities is kind of the main takeaway there. Just so much happening, so much opportunity, the evolution now, the trends that you're tracking and really helping to identify and grow. One of the things there, and we'll kind of get you out of here on this, was, less focusing on where the opportunity or white space is, but for a founder and for the entrepreneurs in the audience that are listening, what you said was, it's less around what that opportunity is and more about where that founder can provide specific value, grow the company, the thing that they're interested in, and can really make an impact and a difference. I think you mentioned that a couple of different times when you mentioned looking at founders, looking at companies. I think that's a piece of advice that, sometimes gets overlooked, is don't do the thing that you think is going to be big. Don't do the thing that the shiny object. Don't chase that. Chase the thing that you're passionate about, you're knowledgeable about, and somehow there's a unique value proposition that you're able to bring. Is there the kind of opposite end of that advice that founders get or that kind of circulate in the industry that you would tell them to ignore? That, when you're hearing these things, it's easy to get distracted, caught up. There's hype, there's the funding rounds and valuations. And is there one thing that you kind of think and hear that comes up you kind of wish people would ignore or stop talking about, focusing on?
Yeah, well, I mean, for sure, you just mentioned it, but the glorification of fundraising, fundraising in and of itself is not, a success metric, but I think we definitely have a culture that has treated it as such. And I think that, the smartest founders I know think carefully about their fundraising strategy. They think about, what dilution means to themselves, what that means to, future rounds of investment, exits for the business, growth of the business. And you're starting to look at investors finally evaluate, capital into a business relative to revenues out of a business. And I think that, it's important to sort of have a mind frame shift from this, looking at fundraising as success in and of itself. So definitely focusing on building a sustainable business is something that I would recommend to all founders. And, frankly, when you talk to 10 investors, you're going to get 10 different pieces of advice, and a lot of them will be good. When I did 5 rounds of fundraising at Videolicious, I always took something away from every fundraising meeting, but nobody knows your company or strategy as well as you do. So it's really important to remain focused and be willing to evaluate and then discard advice, not from a place of being defensive, but really, remaining focused on what you see as the opportunity. I got a lot of advice from, really smart Silicon Valley investors that, I evaluated and discarded because ultimately, I knew where my business was going. I knew the market, and nobody else will know that as well as you do.
Definitely some incredible advice there. And I think through the entire conversation, the really shaping of the positive living space, the opportunities in the wellness industry that are still, yet to come, we're really just now starting to see the potential for, and the advice for entrepreneurs in the space, but also just entrepreneurs in general who are going through the process of fundraising, starting at companies, figuring out how to, make their way forward. Some incredible insights, and just wanted to thank you for being here and joining us and taking the time today.
Awesome. Thank you for having me.
Is there anything that, as folks are listening, if they want to get in touch with you or Able Partners, where they can reach you?
Yeah, so we have a website, ablepartners.nyc, and on there's, an info email. You can shoot us a note there, find us on LinkedIn. Our Instagram is a little too clever. It's laudable, LAUD_able, and you can see what we're doing there. Look forward to hearing from people.
Yeah, we'll tell them to check it out and just get an idea. You guys are putting out some great content. I actually saw that on the topic of psychedelics, there was a blog post that recently went up, as well as just a look at all the companies, the who's who of folks that you've invested in. So it's been exciting, learning more about Able and your story. And again, thank you for the time.
Yeah, thank you.